Hello, today is Friday. It is 4:13 in the afternoon. It is March 10th, 2023. I want to do a quick video, get this out to clients just to keep them aware of what's happening. A lot of volatility. Again, just to recap that this is for informational use only. This is to keep clients aware of what is happening. This is not an offer to sell or anything of that nature. The thought process going into this week was this. We are in the process of basing and it's not going to be fun. And as you can see, the performance here, the S&P 500 was down 4.55%. That is a terrible week, but we are holding key levels for now. We have to gain a level and actually hold it for me to add. And so this has never been the issue for me, is protecting on the way down. It's been making sure I add on the way up. So we have to be real about that to say, I understand everybody's panicking, but this is what I'm good at to make sure we try to protect as much on the downside, wait till a key level holds, and once it does, even though all of you think the world is ending, I have to add. That's how we're going to make money, okay? So think about this from a psychological standpoint, as I stated a couple weeks ago. This is all adding up. This is exactly what I thought would happen. Everybody is looking at their tax documents, statements, end of year performance, saying this is going to die. This is what usually happens right around the beginning of March to middle of March. This is what happens. You get weeks like this, scares the crap out of everybody. And if a key level holds, you could get a 4% move up in a day, period. Okay, so do not get too bearish here. I'm trying to make sure you understand that, because this will lead to good things shortly if a key level is gained. If a key level does not gain, I do not add. Okay, so let's go day by day. And just to reiterate, this does not mean that I was up 4.61%. This is against the benchmark. The benchmark is the S&P 500. I'm trying to beat the S&P 500 long term. Right now I'm not beating it, but this week definitely helped. Okay, the S&P 500 is hard to beat. Why do we track it? Because it averages 10 to 12% on average a year. You know, you're going to have a year like last year that was down 22%. We were down a little bit more, unfortunately. But on those years, do you really want to be a big seller? No, you want to be considering buying when the risk reward is good. So I understand you're seeing all these headlines. It's terrible. I get it. We have a lot of big headlines coming up next week too. But I'm going to go over each level and I'll talk you through it, okay? So this was the week. As you can see, each update was very, very small. That's not what I want to see if I'm bullish. These started up the day, up 1%, and could not hold. That is downtrend behavior, okay? And today this was down 2% at one time, squeezed at the end, okay? So this is typical Friday behavior. You can't really, you have to take any move at the end of the day with a grain of salt. So I am not too bearish here. I'm protecting, thinking that this will bounce very, very soon. Okay. So let's hit the charts. So we showed you that. Now let's look at sectors for the week. Okay. Not a good week across the board. XLF, you're like, why were financials down so much? Well, one of the banks defaulted. Do not, in your mind, do not compare every bank to the bank that defaulted. The bank that defaulted had issues for a while. They did some fraudulent stuff. Take that with a grain of salt, okay? But it does cause pin action and cause the other firms to go down. Like a TD Ameritrade or a Schwab goes down significantly on this move, even though it probably shouldn't, because it's all tied into an ETF. So if one stock in this XLF ticker goes down, people are going to sell the ticker and it affects the rest of the companies. It's pin action. It's just the way it works. So across the board, just an ugly week. You just got to protect during these weeks. And we were in cash all week. So understand, when I'm in cash all week, I'm not just sitting on the sidelines, clapping my hands, watching movies. I'm watching every second. I hate being in cash because I know when this turns around, it's going to be a 4% move day probably. You have to understand that. So I don't like being in cash, But right now, everything that I'm seeing points to that at the current state. That could change as early as Monday. Okay, so we have to be ready for that. Across the board, biggest holdings in the S&P 500, not pretty. We did not. This is the FOMC breakout. We are having a hard time holding this. This is just downtrend behavior. Every bounce is getting sold. Okay, so that's the ugly part. Now let's get to the levels. Okay, the levels, the key levels that we need to hold. Number one, we need to hold 38.50, and 38.31 is a big one. 38.31, it would be right here, which would test 38.31 would test the breakout that we previously had. I think we need some blood in the streets, and I think we're very close to getting that. I think people are gonna. What I think is gonna happen is this, and it's funny that I'm telling you this because people are still calling me, even though we're in cash, and they're panicking, even though I've been saying this same thing for the last 3 weeks. Okay, I understand it's been ugly, but we have to remain optimistic because we just prevented a huge decline. Okay. So think of the psychology here. Many clients are going to go to their advisors and say, I'm tapped out, I'm done. Especially if we open down red on Monday, people are going to throw in the towel. That is what I think could be a capitulation event, which means all the bad news is out. It really doesn't matter what news happens from there. It's so oversold, it may not matter. Okay. So that's what I think could happen. But again, I don't have a crystal ball. So if 39.12 as 38.80 and 39.12, if 39.12 recaptures, this could be a big squeeze very quickly to 39.40. If 39.40 recaptures, which is right around here, the 200-day moving average, the red line, this recaptures, watch out, because the move will probably bottom from there and be a strong move higher. So we have plenty of events that I'm glad we're going down into these events because it makes risk reward much better. A lot of the bad news kind of baked in kind of situation. So do not let, a lot of times the market scares the crap out of people into big events. And then the big event, regardless of the news, rallies. I don't like rallies into big events, and that's what it's been doing as of late. It's been rallying into big events or squeezing right after the event and not holding. You want to see the first move down. So what we want to see is a first move down on Monday, scare the crap out of everybody. Again, we're in cash, so the lower we can get in, the better risk reward long term. But again, from a rules standpoint, let's clean up the chart here. From a rules standpoint, I'm going to switch charts here so you take some of the lines away. The S&P 500, here we go. We clean it up a little bit. The 5-day moving average is the short-term trend. The short-term trend, the 5-day moving average is at 39.36. 39.36 is right here. Okay. So that's kind of what I'm saying. If we recapture that, this thing could really go. Okay, that's why the key level is there. So short term, we're below a 5-day moving average. That's not a good thing. We're below a downtrending 200-day moving average, the red line. We're below a 50-day moving average. Not good. So right now we're in a downtrend. The rules that I have is you don't fight a trend. That's where I tend to do better on the downside and protect. What I'm not great at and what I need to improve on, and why I'm bringing somebody on to help me, is to make sure I buy to the upside. So if we have the protection on my end and his upside potential, this is going to be a really good combination. Okay, so that's the thought. So don't fight the trend. Again, most of the moves happen 4 times a year. Everybody just thinks, oh, it's been a great year. No, it happens in 4 big swings. We had a big one in January, missed it. You got to protect on the way down once breath dies. And you're like, Jonathan, what is breath? Breath means if I throw a dart in the stock market and choose individual stocks, what are the odds of that stock of going higher? And when breath is strong like this, you can get away with doing those things. January, for example, boom, very good. Once that rolled over, not good. So the risk reward is not good here if you're doing individual stocks, which is why I'm trading the index only. Okay, once we get some strength, we can go into individual stocks, but we're not in that situation. We haven't been in a long time. Okay, so that's the breadth conversation. You're going to hear a lot about the 10 and 2, the 10-year yield and the 2-year yield spread. I want to hear recessionary talk all week. I want to hear it in the news. I want them to scare the crap out of everybody. I want to red open, scare everyone out, and a capitulation event happen. And I think that might happen. So I'm glad we're in cash now, but we will have better risk reward. I mean, if you can prevent a 5% week, or in this case, an 8% down week in the IWM, like that is an absolute murder of a week. Okay. The risk reward is not bad. So let's take a look at the chart. This is the QQQ, not a great chart whatsoever, but this is where the strength has been, is in the big mega cap names, and SMH, which I'll show you as well. SMH much stronger. So this is good to see that this is at least holding up. We're above a 50-day rising day, 50-day moving average, and a 200-day. So there are still some areas holding up. You want to see the areas that hold up the best during these downfalls, and those could be the areas that you want to get in. But right now, there's not enough strength, okay? Let's go back to the IWM chart, which is the Russell 2000, which again, is tanking because there's so many banks involved. Like, this is just a free fall, okay? Good things could happen once a key level is gained. Like, we had a decent bounce off the bottom, but it's still not pretty. Like, that is big time selling volume. This is what you want to see when it's about time to add big capitulation candle. I think we might need a little bit more, but we're getting closer. Have a great weekend. Again, we're getting very, very close to bringing on this gentleman. You can see the performance that he has had. He's RMX Capital. Don't worry about the name titling. Nothing's going to change for you. It's just how we're going to manage the funds. Okay. So hang in there. Have a good weekend. We're in cash for now. But again, I cannot make money for you if I'm sitting on the sidelines. So when the risk reward is good, I have to take chances. So don't call me and say I can't lose another dime. Like, what am I, if that's the case, then I can't invest for you. You know what I mean? So let's chat it out and make sure we have a good conversation. But let's just be thankful we prevented a 5 to 8% decline this week. Amen. Bye. Have a good weekend.